Welcome back now. Astral has released its annual results. It's a tale of two halves with a lot of pressure, I think, on earnings in the first half and a recovery in the second half. At the end of it, though, the poultry producers' top line increased by over 10%, while the bottom line grew by 14%. Shareholders reap the benefits, you see, in a total dividend that has more than doubled to 11 Rand. The company's CEO, Gary Arnold, joins us now with greater perspective on the overall performance. Hi, Gary, good to chat to you. And I think congratulations are in order, but it hasn't been easy because there was the first half where things were difficult, and then the second half where the ship or the rocket just took off. Take us through what happened.
Yeah, good afternoon, Ray, and to your viewers. As you've said, I mean, the first half was a difficult trading environment for us. We had come off the back of months of selling price deflation at that time. And, in May, when we presented those interim results to shareholders, I think we said that, negative broiler margins, so the margins that we make on all the chicken we sell, not sustainable. And we had to take a view forward. Firstly, it was a selling price correction that we needed to achieve from the market. So pleased to say that we did get something back from the market, although very difficult at times given, the consumer environment that we live in. Not always easy, chicken being the preferred, more affordable protein source, to go and take a price increase on chicken. But we had to claw back some of the selling prices we had lost, especially in an inflationary environment where costs we do incur inflationary costs in the business. We said at the time that we would increase production volumes, and that was off the back of very good trading over the last festive period, where we sold a lot of poultry volumes out of stock, but at that time at the wrong price. So that resulted, in that first half you saw then. And then, we've realized good efficiencies in the business through the second half. So being able to turn it around in the second half and deliver a much improved performance on the first half. We also had a benefit or a tailwind in softer commodity prices towards the end of the second half, with feed input costs, poultry feed going into our birds at better levels through the second half, Ray.
Yeah. I mean, Gary, when you have a look at this, and I always look at your industry as a reflection of the overall economy of South Africa, are you finding it now that there's more spending power out there, that South Africans can spend more? Because chicken is affordable, but what are you seeing? Are we lifting a little bit?
Ray, I think it's always a little difficult to call that. I mean, if we look at some of the results that are coming out of the retail sector at the moment, they have seen some improvements year on year. But then that's an environment where you see a lot of new store openings. And within their food baskets, they have spoken about selling price deflation across some of the food products through the year. I think if one just takes a look at the news today and we read a little bit about interest rate cuts that may happen at the next sitting, of the Monetary Policy Committee. That could bring some good news to the consumer. Inflation seems to be under control. I mean, the 3% target range, now in play. So that'll all certainly help the consumer. What we believe the market needs to see is job creation. I mean, there's all these households out there with one income earner in the family and has to support the family and extended families. It becomes difficult. So that income is spread, over quite a range of costs within the food basket and transport and all the other costs that hit the consumer. So I think job creation is something we certainly need to keep firmly fixed on as a country. And then we need to see, macroeconomically prospects improve for that to happen.
Sure. Right, back to your results. I mean, strong cost management, that was the one thing I had to look at. Have you had to look at your own business and say, let's make sure if we get our costs down, our profits obviously go up? Was that one element?
Yeah, certainly, Ray. I mean, I think we're always very cognizant of costs because we do operate in an environment with very thin margins. So, any headwind can just wipe those margins out. And then you've seen that through the poultry industry over the years, volatility certainly comes our way. So cost is always important. I mean, we have a responsibility to deliver affordable protein to the consumer, as we've spoken about. And certainly Astral stated best cost strategy is something that we always focus on. You know, to produce chicken, it needs to be at the right cost, because you certainly can't correct any inefficiencies or high costs in the selling price for chicken. The market just doesn't allow it. Through the second half, what did assist us was the higher production volumes, so diluting operational costs over every chicken or every kilo of chicken we produced. You know, when you cut back volumes like we did last year, when we had high stock levels, you know, that you can't turn off every light switch, you can't turn off all the refrigeration, and you still have the same manning levels in the plant. So, you know, certainly producing more kilograms or tons of chicken assists that cost base. And just with very good focus on costs, and then the benefit or the impact of higher volumes has gone a long way to you know, ensuring that we produce chicken you know, below those inflationary cost increases year on year. So a good job, well done by the Astral team.
Yeah, a great job, because your broiler volumes are up. Why is it? I mean, what's the bottom line that has changed here to get those broiler volumes up? Obviously, you can see your shareholders are smiling today. I would be. What led to that? I mean, what got them to just you lifted it?
Ray, I think it was, you know, it's a combination of things. We did work away those high stock levels over the last festive period. Again, not at the right pricing, but we managed to work away all that stock. And at the time then made a call, you know, we could see the demand was coming through in day-to-day trade. We've seen some consolidation in the market. You know, there is a producer out there that, you know, we all know their story, but without mentioning names, you know, that has obviously those volumes that were being produced there have now been spread across the balance of the market, or the producers that are out there. Astral was in a fortunate position that we had spare production capacity, so we were able to add birds within a reasonable lead time and bring those volumes to the market. And we've seen fairly well balanced supply and demand through that period. And then I think, you know, foot and mouth disease has been spoken a lot about in the press. That has played havoc on beef prices. So we've seen beef prices during the year increase quite substantially. Whether we can say that had an impact on poultry volumes or not, and the consumption of chicken, I think it might have had a small part to play. But certainly, you know, because beef just became unaffordable for some folk.
Yeah, and chicken is your great alternative. Gary, thank you so much, and congratulations on your results. Good to chat to you. Thank you.
Thank you, Ray. Thank you for your time.
That was Gary Arnold, CEO of Astral.